for something. And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And welcome to Financial Fitness Friday. It is live. For some people. Rich Rosso, Danny Ratliff, we appreciate you being here today. Obviously, we didn't know if we were going to be here today with all the storms that rolled through town last night. It was definitely interesting.
Yeah, most of town is dark.
Very
no
dark.
electricity for most of it. It was interesting driving in this morning.
Yes. Yes, a lot of people, a lot of damage. It seemed to be very scattered around different areas of town. Like it wasn't uniform. It was Cypress and then their Heights. And I mean, it just seemed like it was.
Well, a couple of weeks ago, we lost a handful of trees, had, some other damage, fences down, some roof damage.
You did?
We did, yeah. I don't
what
think
storm
we.
was that? Goodness.
No, whenever we had that big storm, the big flood we had a couple weeks ago.
Oh, okay.
Brought a lot of high winds in our area. Winds were kicking last night.
The winds were amazing yesterday. They were definitely.
Yeah, but I mean, we've been without power since 6 or 7 last night. However, I don't think we had much damage.
Well, that's good.
Yeah, I didn't see a lot down, but the closer I got to the office, I started to notice a lot more trees down, things of that nature.
Yeah, so hope you're all safe. And obviously, we're talking to everyone across the country here on the YouTube channel. Yo, Lakeland, Florida. Oh, making me jealous. So, Danny, it's like this incredible market when you think about, and Wall Street Journal has this article, and I was thinking about it yesterday, that everything is going up, right? Dow stocks, tech stocks, crypto, gold, houses, junk bonds, listen, it's a party.
Yeah, much better participation, something we've been waiting for. Now,
yeah,
how long-lived will this be, I think is the question. We see this for small periods of time, and then it seems like we kind of retract, get back to that big magnificent 7 or 6, whatever you want to call it now.
People are still buying. I understand where retail sales are, and I understand if you look at them adjusted for inflation. But, man, I'm telling you, there are deep pockets. You older baby boomers, you've got some cash. Remember that story when we were in brokerage and everything, we always talked about that when the boomers retired or were about to retire, that the stock market would collapse. And they would just go to bonds, and they really wouldn't be spending any more money. And that whole theory just went right out the window.
That narrative is still here, and I think we're going to talk about today. Lance and I talked about that with Bitcoin on Wednesday, and that was fun. You guys are very lively on the chat.
Some entertaining YouTube chat there.
Oh, that was fantastic. So a couple of you have invitations to come on and educate everybody on Bitcoin if you would like. Lance would love that. Really, the premise was about...
You want me to bring my roulette wheel in for that?
That'd be fantastic. Okay. But the premise behind that was essentially, the math behind it. Rick Edelman, who is now very big in the crypto space, was discussing how advisors would begin to use it. Mm-hmm. And his premise was all these baby boomers getting out of cash, getting out of stocks, starting to look at other types of investments, and advisors beginning to push that narrative as well. So I think it's still there, maybe more than we think.
Well, yeah. I mean, listen, Rick Edelman has always sort of been on this cutting edge of tech. A lot of his stuff over the last 10 years has been future shock in some ways, looking ahead. But I will tell you one thing. Brokers, for the most part, are lemmings. And let me explain this to you. Brokers can be sold anything to put in portfolios. Listen, nothing against ARC, but it was used inappropriately. I just read a lawsuit last night about a broker who put pretty much all of his clients' money into ARC funds.
Which, when things were great, it was fantastic, right?
Okay, but
also, how did he sell it?
Well, I don't know. But the point I'm trying to say is that brokers are more susceptible of diving into the latest hot thing than you are as an investor. Like, they get enamored just like you do.
Yeah.
And in some ways, I think Rick Edelman is correct. Being an ETF in several forms has legitimized this speculative component.
Oh,
right?
no doubt.
I mean, so just the ability just to say that, this is the future, this is now, we're going to have to put certain percentage of your portfolio into it because there's a gospel. I can very well see how brokers sell themselves on it and then sell you on it. I, for one, I don't, for example, see us doing it. But if clients do want to do it, we've always said, listen, look at it for what it is. Forget all your romantic stories and how it's the wave of the future and all this other crap that you throw out. Look at it for what it is. First of all, the entire market, anytime you invest, all you care about is price. You all say you're value investors. You all say you're investing. You're looking at cash flows and all that. That's a bunch of crap too. Okay? You want the price to go from 10 to 15. That's what we care about as investors. We care about price. Right? I know I've said this on the show before, but Paul McCulley during the financial crisis, who to me was one of the geniuses behind PIMCO. Now he's some dude in a beard and, I think he's like in a cult or something. No, but he still writes once in a while. I wish he would write more because I thought he was a genius. He said, listen, you all think you're investors, but that's a bunch of BS, okay? You all want a small tree, put it in the ground to become a bigger tree. You don't want seeds to put in the ground and wait for them to grow into this incredibly beautiful tree. You don't care. You're not value investors. You're not. So, I guess so I want to understand what kind of blowback did you get about the Bitcoin stuff? What were you getting? Like,
that we don't understand it, that we don't know what we're talking about. We should go
Okay
get
Boomer, you got the Okay
it.
Boomer thing on it?
Oh,
okay.
man, yeah. And so the whole thing behind that is how do you use that as a advisor or as an individual looking to add it to maybe a bigger picture of it? And listen, I know there's going to be those crypto guys out there, that's all you do, and you have drank the Kool-Aid, and that is fine. But it's not for everybody. And you need to understand that volatility for many people is unacceptable. They can't handle it, right? They can't stomach it. And so I think that's where it becomes problematic, is making an understanding from what we do. How do you add that to a portfolio? But then the questions we get frequently are, hey, what do we do with this? How do we invest in it? Now that it has changed where it's just not, you don't just go to Coinbase. You can go and you can buy that ETF. It's in some 401ks. We're going to see more of a push towards it, especially if there's more advertising. But I think what really, Rich, what a lot of people were kind of alluding to is maybe extracting the blockchain technology from the actual crypto.
Blockchain is the potential. We'll talk about this on the other side of the break, but blockchain is obviously a technology. There have been a lot of great books on it that has potential to do a lot of things.
Yeah.
We'll talk about that on the other side of whatever the break is. We'll be right back.
Do we need one?
I don't know. I think we do.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Well, welcome back. So, before we continue, because I want Danny's feedback on this, I have nothing against crypto or Bitcoin or anything like that. Every investment's a story. I don't care what it is. I don't care if it's Kraft Heinz stock or Bitcoin. Your objective is pretty much the same. I want to do well in my investments. I want to make money in my investments. Obviously, every investment has a different personality. I always look at investments by personalities or betas and figure out, is this going to be boring or exciting? Forget the fact that, I'm trying to be some zealot trying to sell it as the next best thing, right? And the beauty part is, and people are saying, well, I could have bought Bitcoin at 100. I could have bought this at that. The beautiful part of markets, and I always thought this as a kid, was fascinating. I always looked at loss or when markets pull back as you don't never miss an opportunity in the market. You may just have to wait. And of course, you may not buy it at the very bottom, but you may get another chance. Look what happened with tech stocks during the pandemic, Danny. How many articles did you read that tech was dead and the Magnificent Seven were this and all this headline fodder that you're now seeing over Dow 40,000 like it's a big deal? But how much of that did we see?
Well, at the end of 2022, I think go back and actually Google articles like tech is dead. And I guarantee you're going to have a ton of stuff come up. Mm-hmm. And it'll likely be November, December 2022.
Yeah.
And then what happened in 23? We saw tech was what really drove the market as a whole. I mean, you could go all the way to November. And if you extract those big seven, the other 493 stocks of the S&P 500 were negative for the year. Go look at RSP was a great indicator. I mean, look at the return of that versus the equal weight, SPY, equally weighted S&P 500 fund. So taking 11 sectors and investing equally. So big difference. But yeah, I think that narrative has changed quickly. I visit with a lot of different people and my kids are in sports. And one of the grandfathers was at an event and, kind of always picking, going back and forth.
Want me to do my grandpa voice? Hey, Danny, I'm going to pick your brain.
You're going to make a lot of grandpas mad. He just sounds nothing like that.
Okay, go ahead. Hi, this is Grandpa. Always happy to see Danny.
Well, what's funny, though, is it's the grandparents now are so much younger.
I know, it's really wild.
I mean, really. But I think that, but the question was, hey, what are you guys doing right now? And just kind of just described or explained our philosophy and said, hey, here's what we think. Here's what's happening. May not be perfect, but here's how we're going about it.
I always whip out my magic 8-ball and say, hey, what are you guys doing right now?
Yeah, you just shake it up. Say, hey, here's where we're at. Yeah. So the feedback from him though was that I rode tech all the way down. I was pretty heavy in tech. I'd done well. Rode it down in 2022. In 2023, I'm up. It feels great because but I'm still just recouping those losses because 22 was that bad.
Right.
And I think that's
if you were overly concentrated,
or
he
said he
fell in love, you had to wait. And keep this in mind that it was a different story during the internet bubble because there were a lot of companies that didn't make any money. I mean, these companies are printing money. Now, they're ahead of their skis as far as the expectations.
Just a tad bit, maybe.
But they are. And someone said this. Who said it on the chat? The Ghost of John Daly. That's a mouthful. There's always going to be a market or an opportunity. Price will eventually come to you, maybe not the optimum price. So I always look at investments as these personalities. And to your point, I would never have all my portfolio in one area, one sector. I did have clients that owned ARC, some of the people I talked to. Well, we wrapped rules around it. We didn't care about the fundamentals of what it was. If you want to own something, it's okay. Wrap rules around everything you own. You probably wrap rules around everything that you do. You may not do it consciously. It may be subconsciously, but you are wrapping rules about how you raise your kids, how you drive, how you spend your money. And when it comes to the portfolio, that's not the Wild West. You've got, you got to wrap rules around every investment you own, whether it's a Kraft Heinz or Coca-Cola or a Bitcoin. So I'm agnostic when it comes to any of this stuff. Like, I'm not like a preacher or, you want to own it? That's great. What's your rule? What's your buy rule? What's your sell rule? And I usually get a lot of dead air, but what do you think?
Well, no, but that's it, right?
My neighbor owns it. My neighbor.
So when do you get out?
So smart? Why is your neighbor so smart? If he was so smart, would he be living next to you? Think about it, Brent. I'm kidding.
I don't know. Maybe he's a millionaire next door.
Yeah.
Right? So but
I'm always humble that way. I'm like, listen, nobody knows anything. We're all trying to get through this whole thing called life together. Man, I have no idea. Go ahead.
Larry brings up a good point on the chat.
What?
And I hear this frequently too. Like, listen, I need to be super aggressive. Okay, let's talk about it. What does that mean? He's like, well, I'm getting 100% returns.
Yes.
Great. So what happens if you lose 50% of that?
What? No, I can't happen.
But I mean, then what do you have to make just to get back to even, right? If you lose 50% of whatever you have to make 100% just to get back.
Only boomers and maybe some millennials can do that math, if that. But
well,
yes.
but then again, what if you're down that much? So everybody's really good when things are going up, but what happens when it goes down? Do we extract all the capital from it?
Yes.
And then therefore losing no chance to recoup it? And I'm not advocating to just say, hey, ride it all the way down and ride it all the way back up. But at what point along the way should we have said, hey, you know what? This just isn't working. We got to get out.
Listen,
Before that time.
We make mistakes.
Yeah.
Everybody makes mistakes. The point is how long you're going to sit with those mistakes. And listen, we're guilty of it just like everybody else. We spend our every day studying this stuff. It's a challenge, right? Listen, the tide. We're seeing this right now. Anything you touch, you're going to look like a maven. Look, I call my girlfriend's son Tommy, who owns these stocks. He's 8 years old. I call him the mogul. He loves it. I'm a mogul, because right now everything is going up. Right? Everything is going up. These are the times, by the way, where I let humility hit me over the head. Like I'm in Times Square in New York and no police are around. All right? Something's going to hit me over the head. I don't want to be overconfident in any market I'm in. And I've learned to understand that there are cycles. The one thing that has ruined cycles, well, there are many things that have ruined cycles, but one is obviously the Fed, because now we're so myopically focused. Listen, we got a consumer price report that pretty much was in line, but way still above the Fed's target, and the market rallies. Why, Danny? Why does that happen, right? First of all, is you're in a bullish trend, right? And no matter what the news is, it's bad news is good news. Good news is okay news, right? So if CPI comes in, inflation is still here, everybody. Whether you're talking about the inflation that's already baked into the cake that you deal with every day, or the rate of change. And it's not at the Fed's target, and the Fed shouldn't be lowering rates for any reason. But the market believes that it should be that, and thus you have to invest along those themes. But don't drink the Kool-Aid. Or if you have to drink the Kool-Aid, put it in a little dropper and take a drop. You don't have to take the Jim Jones or whatever his name is dose of it. What was his name, Brent? Yeah, I got it right. Right, Danny? Everything's about perspective. And as we manage portfolios, but most important, what did you say yesterday about us being psychologists? We're managing people's emotions more than anything else with everything they do.
Well, that's right. All these certifications and degrees in finance and whatnot and experience, sometimes you need just the experience of dealing with people, and the psychology behind it is crucial. I had a conversation yesterday evening with somebody, and one of the questions was, and you may be listening, it was a great question. What happens if I call you in July and say, I want to get out, I can't take it anymore, what do I do? And my response is probably a little bit different.
He said he wanted to get out?
No, he said, what would it be if I called you?
Oh, okay.
Then
what would it be if he
said, I
called
want
you?
to get out. You're gonna do your best to talk me into staying. I said, no, actually, and this is counterintuitive to what most advisors do.
First of all, before you continue, and I want to interrupt you, this is a very, very good point you're about to make. So I want everybody to listen and stop playing with themselves there with each other on the chat.
Well,
no, I'm kidding. But this is a very good point, because this is like a test question I get all the time. If I called you to that, you think you're going to do what every other broker is going to do, is like say, well, I believe in time in the market, not timing the market, right? Go ahead.
Now, one, I want to get a little bit better understanding, typically as we're visiting or working with somebody, of what your overall experience with the market is. Number one, we visit with lots of people, and sometimes, a husband and wife will come in, or we'll be on a Zoom, and, walk down the hall if they're in the office, and the wife turns around and says, we've never made any money in the market. Okay, that's good to know. Then you start finding out why, because of the emotion behind it. And I get it. This is your livelihood. You've worked your whole life to accumulate these funds. It's your security for the future. So what happens is a lot of guys out there are really good putting money to work when things are going really well. But it's usually after the fact.
Let's put it this way. If a woman was the captain of the Titanic, it wouldn't have hit the iceberg. I'm telling you right now. Men will stick to a decision no matter what, because they make
until it gets too bad.
Exactly. Women are somewhat more rational, and studies have shown this to be true.
Yeah, we'll finish this up.
We're going to talk about that, and we got to talk about, hey, what if you live longer than you think when it comes to Social Security? We'll talk about that when we get back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never discuss.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Food in total is now making up 30% of the average discretionary income.
I believe it. I mean, that is our largest expense is food.
Yeah.
And we rarely eat out.
The Real Investment Show podcast.
Our biggest frustration at home is how do we do this cheaper?
Yeah. No, I agree. We're running Hunger Games at our house.
At realinvestmentadvice.com.
So, if you can make it to the table without getting killed, you get to eat.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Then we're back. Gordon's talking about Jimmy John's. Man, I can go for some Tommy John's right now. That's what Lance calls them. Oh, man. That's some expensive underwear. That sure is. Those especially the salami rides right up with the cheese, man. Terrible.
That's why you buy them on a payment plan.
You buy Tommy John's on a payment plan. Yeah, you use those pay now, pay later apps.
That's right.
For your Tommy John's now. Oh, and even your Jimmy John's. That'd be true. So I think it's, when we're going to talk about Social Security in a minute, but it's about perspective here, about any investment you own. It's real important to step back and keep a level head. And I know that's not easy, especially when the Wall Street Journal has this article that everything is going up. Woo! And you know what? If you don't invest because of who's in office, that's a big one, right? When Obama gets in, I won't invest. If Trump gets in, I won't invest. When Biden got in, people are like, I'm not investing. And look at the market.
That goes back to the psychology of it all.
It's a totally different thing. You can't let your political views also affect. It might affect as we get close to the election, Danny. What do you think? Sector rotation. But you can't let your political views affect you from making money. You really have to step away from that stuff when it comes to markets. It's just very counterintuitive for what you might think. Like right away you say Biden, people go, oh, the market's going to be terrible. Oh, Trump, the market's going to be great. Oh,
I love it how Trump is now this big unknown. Oh my gosh, Trump's going to get in and we don't know what he's going to do. He's such a wild card.
He's
It's like,
a wild card.
He's
We-
been
we-
here for 4 years prior to this. Like, we know what he's going to do.
we already saw what he did.
Good, bad, and different. I mean, yeah.
But when it comes to markets, maybe Trump won't be good for the market. I don't-
maybe not, right? Maybe more tariffs,
What-
maybe.
Well, right. We could have more terrorists. I also think we could have a recession, a bona fide recession under his watch. He will get blamed for it, even though we might have conditions that have led up to it. If inflation doesn't come down right away, and I'm not talking about the White House's stated rate of inflation. I'm talking about when you go to the store now and pay double for bread. If that bread is still double in a month after he's in office, you're going to hate him. What? Wait a minute. Wait a minute. Right? My eggs are still this price. Okay, there is things that presidents are out of their control. So you cannot invest your money based on who's in office. It's just a terrible mistake.
Well, need to be concerned about disinflation, deflation, the actual difference between the two, understanding that. But, the psychology behind all this, I think, is so important. And so,
Yes.
That question, we were talking about last segment, how great question from somebody. What if I come to you in January and say, give me out. I can't take the volatility, whatever may be going on. You're just going to try to talk me into staying in the market?
Oh, yeah, right. Let's go
Right?
into that. Yes. Go ahead.
And I told them, no, that's not my job to talk you into doing something that's going to keep you up at night. So the way I always put this is there's no amount of return that you can make that's
Did he
worth
go quiet on you, though?
that's worth your health.
Yeah, did he go quiet on you?
No,
like when he-
I think it was a different
he shocked?
answer.
Oh, okay.
Because he asked his advisor that, and he said that he came back, well, you pay me to do a job, let me do my job, basically.
Oh, okay.
And I get that point too. But I told him, I said, listen, we're going to talk through it. I'm going to say, well, here's what we're seeing. Here's why. Here's why I would advise not to do that. Or, you know what? This is keeping you up at night. You're losing sleep. It's not worth your health. There's no amount of return that is worth your health and your sanity. And at the end of the day, these are your funds.
Mm-hmm.
If that's what you need to do, great. But
We might have to adjust certain things and plans and other things. And don't be the person that then when the markets turn or whatever it is, that you're going to change your emotional attitude. If you really know inside that you just can't handle the market, I'll give you all the credit in the world for knowing yourself, right? But don't tell me to get out and then get in. How many clients have you worked with that they steer the ship right into the iceberg? Like they get out, like they're good contrarian indicators for us, aren't they?
oh, great. And,
Yeah.
what's interesting, though, is that if you go back and look at the returns on somebody who would have, and we are active money managers, so meaning that we will get more conservative without you having to tell us anything.
Right.
And there's also times that we're going to get overweight equities when we feel really good about the markets or what's going on, that we will overweight a portfolio. So we don't have to have that quote unquote guidance, so to speak. Now I get it. These are your funds. And if you want to get more conservative, even more so than what we're doing, that is fine. But I will tell you this, and Rich, I think you can vouch for this as well, that those returns for somebody who may switch a portfolio model, maybe they go from an 80-20, 80% equities, 20% bonds, to a 20-80, and they've done so, they've gone back from a 60-40, 40-60, jumped around quite a bit, their returns historically aren't as good. Because usually they're doing so not preemptively, they're doing so as things have already deteriorated. And while we may say, hey, you know what, we've already reduced exposure, we feel okay right here, markets got overdone really quickly, we think there's going to be a nice bounce, or maybe we're bouncing off support, hang tight, and no, I got it, I've got to. And then they do so, and then we see things run. Now, I have clients who've been more aggressive, so you know what, we've done really well, let's tone it, pare it back a bit. I'm good, I understand I'm going to miss out some on the upside. I'm fine with that. And I think that's okay, understanding that, but we also have to understand we have to change what are our benchmarks? What are we going towards? At the end of the day, what all of this really is for is to achieve your goals and objectives. What's your hurdle rate? What do you need to make in order for your plan to be successful? And unfortunately, though, that a lot of times that I find is that somebody who does jump around quite a bit from an allocation, they're still going to judge against the S&P or whatever else index is hot that year.
You mean if I have only just 20% in stocks and 80% in bonds, I'm going to say, why didn't you do better than the S&P 500? Yeah, I got that question yesterday.
Yeah. Well, and the question should be, is it, okay, what's a more fair, accurate index that we can maybe judge ourselves against? But then again, what is the overall goal? Yeah.
Grandma's knitting. That's what it's going to be compared to. Grandma's knitting is more exciting than a 20/80 portfolio. But if that's what you can deal with, at least you're not getting all out of the market, right? That's the most important.
Well, that's exactly right. So the psychology behind it, I think, is so important. But at the, going back to the root of this conversation was, if I want to get out, go for it. I mean, what would you say, Rich?
No, listen, we're here. If you give me some reasons why, and they sound good to me, and that's fine. I don't mean like sound good as far as, excuse me. I don't mean sound good as far as, it's some narrative that you heard on CNBC or Fox Business.
Oh, we get that a lot.
I know. But if it's more of, listen, I've thought about this and the volatility, it's just too much. And it's a soul search. I can hear it in the voice. Like we've been around long enough to know when someone's really sincere and really took a look at it, then I am more than happy to help you allocate appropriately. Now, I think Lance brought this up maybe with you, Danny, I'm not sure, but he was talking about all the mistakes he made managing money over the decades. And one was that he got fully out of the market for 2 years. When I remember investing during, say, the tech bubble, I was still in like some consumer staple stocks, preferred stocks, and some other things. And I had some portfolios that went through unscathed. But I was less in tech. But I've also made mistakes like Lance. You can't, if you want to be a stock investor, you're going to have some allocation to equities, especially now when the Fed comes in and manipulates everything, right? I mean, the world's changed when it comes to cycles, right? Since the financial crisis, it's not been the same.
It's changed drastically, and I think we're seeing things happen much quicker. Even since the financial crisis, we've had those years of negative or flat returns. And arguments we could make back where, maybe Yellen should have been hiking way sooner. Ugh. There's lots of opportunities.
I'm not going to use my Yellen voice this morning because she disgusts me so much. I can't even get it out of my mouth without bile coming up with it. So,
But we had a lot of different opportunities to do things differently and to get to where we are. A lot has occurred. But we've also noticed that we just haven't. It just hasn't been this long, big, great upcycle. We've had those negative years in between, and so psychologically. That does something to people. And I think that's the key here, is that how do you navigate this? And we have to put those biases aside as well. I mean, there's a lot of times that, as a group, we could get together and say, man, look at the pros and cons. But markets are running. We've got to remain, we have to stick with our discipline, stick with, what we've got. The guardrails, as Rich would call them. And you know what? We can be nimble. We will be nimble when necessary. But, sometimes you kind of grit your teeth and say, all right, well.
Listen, you got to participate. It's like I say to clients all the time, it's okay to go along with the madness of crowds as long as you're not mad yourself. Keep a perspective when everybody around you is losing it, right? That's sort of how you have to do it. I'm not saying that's easy. But that's what you have to do. So we participate, but we're not drinking Kool-Aid to tell you that everything is hunky-dory and that stocks aren't expensive. I had one person the other day, really nice guy, came to one of our lunch and learns. He says, well, I looked at this stock and I looked at the price to sales and fundamentals, and I said, why? Why bother? What?
The fundamentals?
Well, it's so expensive, and that's why I shorted it. Why? Shorting is dangerous enough, but if the psychology is for this company, you're going to get obliterated.
Yeah, that's right.
So it is what it is, man. Got to work with it. We get back, we're going to talk about, finally, how long you're going to live. Hopefully long enough for this show. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Larry Smith on chat says something very important. He goes, I should have never put those Mickey Mantle rookie cards in my bike spokes. My goodness, let me tell you. There are G.I. Joes, comic books, Star Wars toys that have done triple what the S&P has done over the last 25 years. Absolutely. I should have been spending my money in the 70s just buying stuff from like model kits and not opening them and just storing them away for later. That's what I should have been doing. Instead of investing in McDonald's stock, having my uncle who was a stockbroker and a friend of mine's father to buy me shares of McDonald's, I should have been buying model kits and G.I. Joes and never taken them out of their packaging and sold them today. That's what I should have been done because the rate of return annually was better than the market. So that's very true. Yeah, look at that. I got a Mickey Mantle card. Brent's like, oh my gosh. Look at all the cards I had. All gone. Very true, man. Never count out nostalgia when it comes to pricing on stuff. It is amazing. Old radios. What's the name of that company, Brent? Because I'm always into radios. Is it the Radio Farm, Vintage Radio Farm or whatever, but they take the old Bakelite radios and they redo them? They're beautiful.
I think it's Vintage Radio, yeah.
Radios are like Radio Farm or something. And then they have all they restore all the interior.
So they work again.
Well, I think you could just go buy new, it's still in the box, at Radio Shack. I mean...
Yeah, find a Radio Shack.
Let me tell you, I'm in the Radio Shack chat rooms on Facebook.
Are you?
And look at this cat. Look at this diode.
Oh, my goodness.
From 1970. It's so beautiful.
Tell me you need to find a new hobby without telling me you need to find a new hobby. You're
I
the
got
Radio
invited
Shack.
to the embalmers.
Hold on.
Ask questions for your embalmer yesterday. Chat.
How did you get invited to this?
It's because of all the research I do for the horror scripts. I get into...
Oh, geez. I don't know. I know what your search engine looks like.
This group might be right for you. Embalmers and cadavers
Have
or
you been
whatever.
to that Undertaker's Museum?
No, I've always wanted to go there. Is it the funeral, the death museum or whatever?
Yeah, it's up in northwest Harris County here in the Houston area.
Yeah, I heard about it.
Got a bunch of old classic hearses. Beautiful,
Really?
beautiful automobiles, yes.
Yeah. Well, they were pretty. They were gorgeous. Yeah. So
what's the novelty behind this?
It's all around the death industry.
well, just it's really I heard it's a really interesting museum about how ornate like some of the old carriages were. There's one in Grapevine, Texas, in front of the funeral parlor. I don't know if you've ever seen it, but it's an encasement. We always go by it, but it's from like 1800s.
It was horse drawn.
Yeah, right.
Yeah.
And it was so elaborate. So I think it's the beauty in some of these things, but the boy.
Craftsmanship.
So have you been?
Yes.
I think that's
Okay.
Well, you know, I was early for a funeral.
it really is history.
Check this out.
Well, there you go. I mean, you're there already, right?
Yeah.
No, so the group I got invited to, that well, Facebook said
Didn't make a special trip. I'm sorry, Brent.
I did post it on.
Like, what?
He went to see it.
Where are we going today?
We're going to use that.
Yeah, honey, don't worry. It's okay.
He's the only
Has
one.
your will signed and your life insurance paid up.
Do you know he was the only one at the museum that asked the curator, can I borrow one of these hearses for later? So
who will bring it back?
So you know how Facebook does these? Richard, here are groups you might like. I posted this on my Facebook yesterday. Ask the embalmer, funeral professional. 20,000 members, 10 posts a day.
Wow.
And this leads segues very well into our conversation about longevity.
Kind of a stiff segue.
It's oh, you're my straight man. You realize that?
Yeah.
Yeah. Especially when you're lying down. All right. So when you are claiming Social Security and it's couples, listen, single, it's easy, right? And you have, it's math, right? You got to look at, I have a higher earning spouse. When is that higher earning spouse going to claim? And I have a spouse who didn't pay in as much. And you can run these scenarios. And sometimes the scenarios can show you that, hey, it would be okay if the husband took his or her benefits at full retirement age. And the spouse maybe can claim early and then wait to claim his benefit. But what we're not sometimes looking at is what life expectancy numbers are you using? Because keep this in mind. Social Security is longevity insurance. There was a whole big fight about Social Security early on. Do we call it insurance or not? Because politically that wasn't going to work. Because if it's insurance, then we shouldn't be doing it. You know, it was this thing was, can't call it insurance. It's a benefit. What is it? But it is longevity risk insurance. It's the risk that if you live longer, you always have a check coming in. It wasn't ever designed to be, oh, I got to break even and get all out of it. It's really designed for those of you and more of you who would have longevity risk. So if you run numbers for someone based on mortality tape, just on the normal mortality tables, you may not be running the right scenario. We might be ripping off the spouse who is going to remain for survivor benefits. And those cumulative benefits are going to be greater than any other claiming strategy that has benefits coming out for the higher earning spouse sooner. So longevity becomes very, very important factor when it comes to Social Security. Now, I understand you don't know how long you're going to live. You don't know how long your spouse is going to live. Sometimes you go by the actuarial tables and you figure out, listen, my spouse most likely is going to outlive me. That's pretty much what the tables say. But it's amazing to me, Danny, and I've said this before, how many people will actually tell me that they know when they're going to die, and that's why they have to take Social Security.
Oh, to the year.
Like
almost a day.
Oh, man,
sometimes.
listen, my mother died at 60, my father died at 70. I mean, you know, I'm going to go into the woods at 69, man.
Well, then you find
And I'm
out,
not
well,
coming
how did
out.
they die? Well, one died in a car wreck, and the other one drank themselves to death. And you're like, well, wait a second. Do you drink? Do you drink and drive? Are we going to be okay?
But it's
like,
anything
yeah.
to get that check early.
Yeah.
So you could be leaving hundreds of thousands of dollars on the table. So if you use, we do Living to 100. When we do planning, we have clients look at livingto100.com to give us an idea, because most about how long you're going to live is based on lifestyle, not genetics. Yes, I understand if you have a congenital issue, but it's mostly lifestyle. Type 2 diabetes, high blood pressure, obesity. It's America. Lifestyle, right? So when we run these plans, we have to be realistic for each spouse's life expectancy to figure out, when do you claim Social Security? We are not going to just go by the actuarial tables. We got to get more. I mean, it's not a magic 8 ball. We got to get close. Living to 100 is a really good test to do it. General health questions is a good way to find out. Are you sedentary or are you active? I have clients who are, and you probably have the same thing, Danny, that are 75 and they do all these things. And I have clients that are 35 that might as well be 75 because they're not doing. Their lifestyles are so unhealthy. Right? Tom Malia says, don't dislike Bitcoin. You're disappointing me. I don't dislike any investment. If you can make money off of dog poo, I'm with you, man. Whatever you're going to make money on, and you can find a way to do it, that's the American way. I'm happy for you, as long as you have rules around everything you do. Rules. But isn't it really important, the longevity question? Like, you look at this rationally, Danny, and figure out, well, if I have a spouse who hasn't paid in as much, and number one, she might be or he might be younger than me, maybe I should really adjust my claiming strategy, unless someone is really deathfully ill and have to do anything.
Yeah, I mean, I think that it has to be a combination of the two of you where you look at this together. We did a class on Medicare this week where we said, look, Medicare needs to be individual. It's very specialized for each person. You don't have to be equally yoked, so to speak, on that. But when it comes to Social Security, if you are married or have kids that are younger, you need to make sure that you're doing what's best for the two of you. Should that be your intent? I know one of you on our chat seems to not care.
Larry Smith's cracking me. I'm living the healthy life and feeding my wife junk food.
Larry.
Oh, it's pretty funny, actually. Go ahead. Grandpa
no,
hates
that's great.
Bitcoin. I don't like Bitcoin. I'm into World War II used cannonballs.
What does Yellen think about Bitcoin?
I love it. It's the wave of the future.
No, go ahead. So this longevity issue, again, is so important to determine lifetime benefits. This is not just your decision. This is you and your spouse's decision. Again, if you're alone, and again, I have single clients who are incredibly healthy and will wait until 70 to take Social Security. Just keep that in mind. Longevity is very important in your equation. And when you run to your planner and you ask, well, what ages are you using to do this analysis? Let me know, what ages are you using? Oh, no.
Where's your break even? What's your longevity look like? Mm-hmm. You've got to know all these things that nobody knows for sure. If we knew, we'd all live differently. We'd spend our money differently. We spend our time differently. But we've got to assume that you're going to live longer.
Yeah, absolutely. Thanks for being here, everyone. Have a great weekend. Lance back on Monday. We appreciate you. You all wear me out on the chat. I like it. Talk to you soon.